welcome everybody in class and at home. What we will discuss today is basically introduction into finance and accounting, focusing on financial statements. First I will quickly explain why do we need to prepare financial statements at all, what is the purpose, what is the reason, what are the benefits of that. Second I will explain what is a balance sheet, so the first of the elementary statements. What is a balance sheet, what positions should you find there, what information do you get out of that. We will discuss the income statement, profit or loss statement, and when we discuss the balance sheet, of course I will quickly explain depreciation, since that is obviously also an issue. First, what is the reason why companies prepare statements? Some of the companies even have to prepare that. In general, the reason for preparing financial statements, of course, is to convey information to stakeholders. Stakeholders are groups of people that have, for whatever reason, an interest in the well-being of a company. A stakeholder is, for example, a shareholder. Stakeholder is a bank. The reason, for example, it's very evident why a bank has an interest in the well-being of a company. Of course, if they give a loan to the company, they have a very high interest in knowing in advance, will the company be in a position, will they be rich or wealthy enough to pay that back. Also, of course, another very important stakeholder, the government of every country. Reason is, I think, very evident. Taxes, of course. Financial statements are, of course, the basis for calculation of your tax payments. So that is also what statements are used for. Also important, in my opinion, don't want to neglect that, speculants, so traders that basically trade stocks for short-term profits, use financial statements a lot and in depth for a very simple reason. If you want to make a profit with trading stocks, you need to know how the future of a company looks like. If a company is doing very well, stock prices go up. If you know that in advance, you buy the stock, basically you can make profit by selling the stock then when the stock price goes up, increases. So there are just a few reasons why companies prepare that. All the reasons I mentioned now are external reasons, external stakeholders. Of course, companies also have an own interest for their own information needs. If I'm the CFO of a company, if I'm the CEO, some manager in the company, I need to know, am I, rich enough? Do I have enough money to pay my debt? Do I have enough money to pay my loans back? Do I have enough money to produce my goods? Also important. Another important question is, if I'm in a position to produce some good, what price should I sell it for? Usually, if people establish a new company without any clue of how all the finance stuff works, they just come up with some price they think is reasonable. That is not how it should be done. You should really calculate your costs and then fix a sales price that, of course, covers your costs and includes profit margins as well. So also, reason for preparing financial statements, internal information needs. Everything as a manager, you're aware of that, you're studying IBMS, so you know that. Being a manager means making decisions on a daily basis, constantly. So in order to make sound decisions, you need to be well informed. That is why we need financial statements.